What's going on, everyone? Good morning. Happy CPI day, Dave. What a wild ride, Jan. No question about it. Looking forward to today's session. As always, I really value this time together. Hope you're all doing well. Good morning, good afternoon, good evening. Wherever you are in the world right now, I am so glad that you're here as we get to do what we do best and put in a strong session and make sure we stay on the right side of the most important trade that matters, of the markets, forever putting together the ever evolving heartbeat of the markets. CPI missed, risk is on, equities trying to turn green, and Bitcoin acting like an inflation hedge. Lots of questions today. Some of those questions is like, what is Bitcoin doing? Is Bitcoin right now acting like an inflation hedge with that high CPI readings? Is Bitcoin acting a little bit like gold, which as the Fed gets ready for that hiking cycle tends to rise as growth slows? Is Bitcoin doing Bitcoin things because of the supply side dynamics? Lot to talk about over here, including the dollar. Did you notice that the dollar, which on the CPI print obviously was bucking straight up and then reversed hard? And you see, look at this. We've come into our sell impulse support, currently holding that area of support. We know that if we roll over, by the way, we're looking at two more areas of support before we have a hard trend reversal. So all eyes on the dollar, and the question is, why is the dollar reversing, right? Is that and yields over 2% right now, 10-year over 2% right now. Our yields are reversing because the market is beginning to price in a Fed policy era. As of this morning, we have the market pricing in that the Fed will be cutting rates 2 years from now. Okay. Now, is that like a bit of, I don't know. No one knows. No one has these answers. The market also pricing in right now about a 60% chance of a 50 basis point hike in March. Wow. A lot going on. All right. Let's focus on Bitcoin first, and then we'll walk through all the macro and try to get a grasp of it as best as we can. And if by any chance, European session just closed, this could be the time that we see a market reversal. Be aware for that. We'll find out whether or not we have any follow through. If we do wind up tagging 46,000 on Bitcoin, make sure you let me know. I'll be interested in that. And right now, we continue over here looking very healthy ever since we had the major breakout to the upside. We are not in any type of warning and or yet looking towards any type of correction. Let's move forward, and let me start off on Bitcoin, right? The question has to be right now is, what do I do? Like, first of all, the observation is that the the CPI came in hot, and that means that the Fed is going to have to fight inflation here. It looks like they're raising rates in March. Not only does it look like they're raising rates in March, the conversation is becoming, well, are they going to raise it 50%, 50 basis points, or 25 basis points? There's people like David Hunter saying that rates are going down to 1.5% and equity markets are going to go through the roof and melt up, right? So we're going to talk about all of that today and make sure we do our best to stay on the right side. But the question is, what do I do? Am I adding to my position over here? And if so, what does that look like? All right. So Bitcoin right now still consolidating above this nice breakout. That's that trend line that we looked at, going all the way back towards the October low, touched again over during the mid-cycle shakeout during the summer. And then when it finally broke, we're back above that line, and Bitcoin is consolidating above it. That's very positive. That's very bullish. There's no question about that. The fact that Bitcoin did not, off this high CPI reading, take out even a level of support is very bullish. So we have that big technical breakout and a strong bullish bias still intact. The thing is, though, depending on what type of entry you're looking for, Bitcoin is still overbought in this trend reversal. Now, that's not to say we can't go higher. I hope that actually we come in towards 46 or even 47. I do expect, if we're able to do that, the next target is going to be, or the next thing that I'm going to be targeting is going to be above $53,000, right? Oh, by the way, I didn't even realize. I was just looking at like this. I'm like, next area that I'm targeting is, you know, right around this high over here from September, maybe just above 52,000, above these two swing highs, getting close to that pivotal level, by the way, that we took out on the downside, 53,140. So we got a bunch of resistance in that area. Hold on one second. Just want to point it out to myself, right? So we got a bunch of resistance in this little zone. And that zone, by the way, is one that has to be worked through before even getting into the danger zone. So we talk about right now that there continues to be lots of repairs that need to be made. We know that Bitcoin is capable of it, right? Right? Because the Penguin was talking about just not too recently is one comment that we looked at that I responded to, that like, well, there's no way. If you're thinking Bitcoin's going to trade up to the top of this range, you should probably start trading. And I was like, oh, all right. Well, what happened with oil? Like, where's my WTI? It's been a minute. Hold on one second. We got a lot to talk about today, and a lot of important stuff. I just want to work through it without a rush. And so that's the same pattern that was over here, right? We're looking at all of a sudden oil coming off hard, and wait, it made those repairs quite quickly. Could Bitcoin do the same? Sure. With the right catalyst, no question about that. Is that catalyst there right now? No, it's not there right now. Could that catalyst easily come into the market? Yeah. Things like what? The Bitcoin bond is certainly going to help. We're seeing continued geopolitical game theory taking place inside Bitcoin. We're looking at states within the United States of America getting ready to declare Bitcoin legal tender, and a lot of bullish things going on for Bitcoin. But overall, I remain optimistically cautious because the macro is highly uncertain. Like it or not, right now, the Fed is on a tightening cycle. Right now, they haven't gotten to lift off yet. That could be weeks away into March, not too long, 4 or 5 weeks away. They already are tapering. As far as the markets are concerned, tapering is tightening. Yes, the taper is real. What my concern is this, and this is all framed with like understanding that, all right, well, we got some upside, and I'm getting to in a roundabout way what your next entry should look like. So stay with me on that. But what I'm getting at over here is before we even get to the danger zone, we still got a lot of supply to work through, and I don't think it's going to be easy, And I remain optimistically cautious because even though the markets kind of threw a fit earlier than I expected, I didn't expect that the markets threw a fit up until we got to the point where the Fed actually gets the hike in. But the markets front ran it. And it looks like today almost that potentially the market's even front running a policy mistake of this hiking cycle. Now we've talked about many times that this hiking cycle may be the shortest hiking cycle or one of the shortest in history, because we understand that this tightening is going to choke the growth. It's going to cause a recession and or breakage in the system that the Fed is going to have to pivot and respond to. A lot of people want to fast forward to that moment but there's a lot of in between. And I view this personally, when I said today, I feel like we're mid-cycle, I meant as far as the equity markets are concerned. I believe that we are very much in a secular bull market, but we are right now in a correction phase. I don't think that we're in a bear market at all. I think that potentially, and that depends on how you define bear, there's no question about that. I think traditional finance defines bear market 20% off the all-time highs, right? Well, I'm talking about also in duration. What do I mean by that? I mean, there is the chance that inflation continues to run so hot that we're not looking at a handful of hikes and that we actually are looking at far more than that, But what I believe they're going to do, and this is where I get worried, is what I believe they're going to do if yields continue to rise, yields over 2% today, right? If that continues to hold and rise, whether it works towards 2.25 or even 2.5, right? once we get above that, I think what they're going to do is they're going to come in with turbo quantitative tightening. And I think that is how they hold the 10-year down. That's my own personal belief. But as we start talking about, or the market starts addressing the fact that the Fed is not only hiking rates, because if you remember, even today, there's a large portion of the crowd that doesn't believe that's happening. The market is pricing it in. But once we start talking about quantitative tightening and that becomes a reality, yeah, like the Fed tightening into a slowing economy and pulling away liquidity, that all becomes a problem. I had a beautiful chart I wanted to show, actually. Just made me think of it. And I don't have it up, so we'll do that tomorrow. But so let's keep going. So there is optimistically, we have the big technical breakout. So I'm bullish on Bitcoin, and I'm gonna stay on top of it and try to trade this and take as much as the market will give me, waiting for some type of technical breakdown. As that stands right now, that's our line over here, and above that, we are bullish. At some point, I do expect some corrections. Even if we're able to work towards the next target, we have to hit 46 first, right? But the next target being in this area over here, I expect on the way up that there will be a few correction, or say a few. I don't know how many there'll be. A couple, more than one, 2 or 3, most likely. I don't have a crystal ball. But on those opportunities, when price does become oversold in that uptrend, that will be the time, if you're looking to go ahead to add to your position from the breakout, to go ahead and do it. Now, if you're looking at trading this from, and you could just pull up over here, by the way. Hold on one second. Let me pull it up for you, just to show that we continue to be overbought in this reversal of an uptrend, right? So this is CPI over here, price spiking below. Obviously, the two trends stayed green. I want to show you what that also looks like if you're kind of like trading that off a very small time frame, of how you keep yourself on the right side. So let's do that. I don't think this is time to go ahead if you're just looking for a normal CTM line of repair entry. We haven't had the correction yet. The last line of repair entry came off the technical breakout, right? I know that some of you held the black diamond. I didn't. I took that as a break even, right? And then I took this one, almost the same price, but definitely a couple of $1,000 difference. Off of this entry here, it's comfortable, right? There's no reason to go ahead and exit the entry, but to add to it, not yet. Waiting for some type of correction, and that correction will first start with us becoming a little bit or a lot oversold in that uptrend. That hasn't happened yet. Is it possible with the momentum we have today, if it continues, that we're able to tag somewhere between 46 and 47? It is. A lot of people might be FOMOing into that level, and then we might actually, that might be setting up a small little pullback. That's what I'm waiting and looking for. All right. So you can see it actually over here. Not that I think that, Big Jeezy would has already shown us almost to the day, pointing out the symmetry of the Bifinex whale taking us out of correction. But you could see kind of similar, just so you get an idea of where my head's at. Not that I'm looking for this fractal to play out. I'm watching what happens with price. But you see price came a little bit, and then boom, and then into the correction. Like, it's very similar to what we're looking at over here. So price could come up a little bit more, 46, 47, and into that. I would feel much better about looking to take a line of repair and add to a position out of that. And that's just not there yet. So it calls for further patience. We also need to see what happens with the dollar today. We saw that it was coming into that sell impulse, whether or not that acts as support, or the dollar is able to break through that sell impulse. And then if it does, we'll be watching those areas over here of support. It needs to break through for a continuation. But right now, as the European closed, we are seeing the dollar rally back here a little bit. Equity markets are still kind of maintaining their where they've been for the past couple of hours. Still above the last breakout over there on the NASDAQ. That's the conservative line of breakout. Still holding. We know what that looks like. So as far as the equity markets melting up, there's one thing that I believe needs to happen for the equity markets to be able to rally here. Right now, they are still with a very bearish structure to them. We have these huge trend line breaks. Right now, they're doing nothing more than bouncing, and we need to watch and see whether or not that low holds or folds, right? So far, it continues to hold, and maybe we're going into some type of pronounced range. A lot of people look for straight up or straight down, right? So what else? What could cause the equity markets to rally? And it's yields, right? And we look at yields yesterday, and we said if we break off the CPI, if we get a lower than expected print, and then yields come off, right, breaking this sell impulse, that would give us the potential opportunity to come back down. I drew this circle over here where it would be that big retest of that. That's drawn in with rough sketches, right? So I want to touch that. I just want to get this like right above that gap up. I'll go touching that line. There's just a small wick over there, perfect touch over there. And I'm going to put it in that area right over here, right? So, and then we talked about like the possibility of yields coming back down towards, 1.65 in that area, 1.6. But we would need a sell impulse over there. And we're not just like, I think yields are going to go back to 1.6. No, we said if we got a lower than expected CPI print, that would be a catalyst that could set up this sell impulse, and then potentially not straight down, but take us down for a potential retest, right? Now, if this continues, now that we got a hot CPI print and yields are rising, like I don't know where that ends. We'll continue to wait for some type of sell impulse, and depending on where and when that happens, the longer the time goes on, this is a downward sloping line. So yields could go lower and lower. For example, if this happens in June, then you're still around 1.6, just below it, right? But until we get this type of breakdown on yields, I don't expect that the equity markets have any type of catalyst to start rallying. The best they could do over here is not put in a lower swing low and just move into some type of range, right? That's realistic. I think it's a little sensationalistic to be like, as yields are breaking 2%, that they're going to come down to 1.5%, and this is going to cause a massive, melt up in the equity markets, and then from there that they're going to crash. Well, who knows? But that sounds like someone who's contrarian, and that sounds like someone who's sensational, right? And that attracts a lot of attention. It doesn't attract a lot of attention to be like, I'm cautiously optimistic here. I'm kind of concerned about the current macro situation, and I believe it calls for more of a defensive posture as someone who's highly risk adverse, rather than just like, talking about some expectations that I don't see the stars aligned right now for that to happen, right? And with that being said, since I don't know what's happening, I'm just going to lean in hard to the technicals, and I'm going to make sure I stay on the right side. This is a trader's market. We are data dependent. Like what type of PMI readings we get, the jobs numbers, fake or real, what they give us is what we have the information to digest. CPI, we said that was the most important, and then we continue moving forward, following what the market's doing, what the market's pricing in. Right now, rate high expectations went up to 60% for a 50 basis point rate hike in March. Could they come off now with the 25, get off to lift off, give themselves an opportunity to be able to react if the economy does slow down by cutting rates before implementing the next QE? Yeah, and I think that's what's going to happen, but they're not doing that right now. Like, they haven't pivoted back yet to dovish. Right now they are hawkish, right? And if you think that like it's hawkish not to raise rates 7 times or 5 times in a year, but only 3 or 4, well, it's still hawkish, right? You're winding down QE purchases to nothing, and you're raising rates, right? And then at the same time, you have that policy error being priced in by the market. It's pricing out 2 years from now, there will be rate cuts. Now, I personally think that's wrong. I think that will happen sooner, right? This is what the market was trading off of today, I wonder. Is the market kind of front running the Fed, already pivoting? If they are, I think they may be early, right? I think they may be earlier, and then we're watching for when we see the inversion of the yield curve, which has marked a recession each and every time. We're watching all these things, but let me come down to this, because this is something that we've said over and over and over again. The Fed tries aggressively to stop out inflation, crashes it all, and has to flip-flop back to rate cuts and QE very quickly. Yes, but we can't all of a sudden jump to the point where the Fed is reversing, and they haven't even raised rates to cut them yet, first of all. They don't need to raise rates, right? Because even going back a few weeks ago, my posture was, assuming they wind down the taper, I don't know what they do. Do they hike rates? Do they pause? Or do they even just go to the next QE impulse? Now it's like, all right, the market's for pricing in 100% chance 25 basis points of a rate hike in March. So whether or not they skip the rate hikes, right? It's or pause. It seems heavily leaning towards there's going to be a rate hike in March. But what do they do after that? They're probably going to keep us guessing, right? Or maybe they're going to be adamant that we're going to have a series of hikes coming. I don't know. But it doesn't seem like we're skipping the pausing or the hiking and moving towards the next impulse of QE, right? When they do move towards the next impulse of QE, right? Most likely that's not going to be like, oh, the equity markets are off, just a tiny tad. What are they off? 20% right now. The Nasdaq went down at its lowest, right? It went down 18%. Right now it's off 10%. Do you think that this is a point in time where the Fed needs to pivot with the Nasdaq off 11%? Right? No. If and when they get to the point they're pivoting, they're going to be pivoting back because they actually made the mistake. Like, they haven't yet made the mistake. They haven't raised rates. They haven't caused the economy to come to a crushing halt. They haven't yet even started running off the balance sheet. All they're doing is tapering their quantitative easing purchases, right? Now, is it going to cause and create a mass? That's our expectations. But during that mess, there is potentially, which is why I'm cautious, some pretty significant downside risk, and why, it's nice to jump forward to when the next part, if you want to be long risk assets, that they come in and they're super accommodative. Right now, they're not accommodative. They're going the other direction, and they're going the other direction because inflation is hot. We don't know how long this hot inflation lasts. It's anyone's guess. It's anyone's debate. Could you smash the like button if you're watching this on the replay today? If you are, please go ahead and smash that like button on the replay. Peter, let's take a look at this really quick. This is a good one. Peter's saying if you cloned the Wes's line over here, I'm going to clone this one off the bottom. And then he said you bring it up towards 46.65. 46.5. Oh, there you go. Oh, is this what you're looking at over here, Peter? Are you talking about this area of support? All right. By the way, I just want to check back. Look at that. See it playing at resistance over there. The click flip into support. It peaked down. This is the peak down over here, but held as support over there. So is that a line, right, of potential? That's a great line to be adding over there, because we were just kind of working out the tension somewhere between 46 and 47. There you go. Peter's like, no, it's 46.5. That's good stuff over there. Thank you, Peter. I like that. I'm gonna leave that up there. That's much better than arbitrarily being like, I feel like it's somewhere between 46 and 47. Like that. Joseph, glad you're here. It is good that you're here. Thank you always being so supportive. Appreciate that very much. Sure, when you get to the point, and when the point's right, when you know it and you feel it, go ahead and smash that like button. Hakuna Matata. That's right there, Thomas. Don't worry about a thing. Everyone, beautiful Thursday. I'll see you all tomorrow. Have a beautiful day. May God bless you.